Good morning and welcome to another edition of the Ashworth Wealth Weekly Market Webinar. We are grateful that you're here with us today. We have a little bit of interesting import-export data that we're going to share with you today. It's a trend that has started that we'll jump right into the chart. Bottom line is that with the trade wars and the tensions that we've had with China, there has been a real effort in the United States to not have as much imports coming from China. And so you can see by this chart that much of the China has decreased substantially. Mexico has increased, Canada has increased, and both of those right now are greater than what China is. And they call it reshoring, or coming back on shore, or even friendshoring, which means that we're going with countries that are more friendly to the United States. But it's an interesting development that is happening as we are trying to rely less and less upon the supply chain that's coming from China. What it means is that we are going to have a greater diversity, I believe, of supply chain issues. If we have something like a COVID crisis again, we probably won't have as much of supply chain issues as we've had in the past. So what we're seeing is a complete restructuring of the economic system that the United States has been working around for the last 20 years. And that retooling, I believe, is setting the stage for another growth pattern that will happen in the U.S. market. It may not happen this year, it may not happen next year, but the wheels are definitely churning to be able to have greater ease in product and availability and imports and those types of things. I wanted to mention another just real quick thing here. Just in the news over the weekend, we saw that China was able to get a microchip down to 7 nanometers. The U.S. currently is at 4 nanometers, so China is still behind. But it's interesting that with the sanctions that the U.S. has had on China, one of the primary goals of those sanctions were to prevent China from developing additional semiconductors that were more powerful than the ones previously. And obviously, there's been bleed through. They have now passed the 7 nanometer mark. But there are restrictions on the Chinese and with regards to their access to breakthrough technologies, just from the standpoint that much of the equipment that's required for breakthrough technologies or reducing the nanometers or the power of these microchips, China just does not yet have access to some of these machines that are required. I was looking online today, and there's a machine that's required. It's an ultraviolet laser that, anyway, it says burns hotter than the sun and creates ultraviolet rays that lays down and actually prints the microchips. But that machine has like 237,000 moving parts or parts in it. And with the restrictions on those parts, it's just difficult for the Chinese to be able to move forward with some of that technology. However, with that stated, they have improved, and the 7 nanometer is sufficient to do 5G now in China, which we've had in the United States for a while. But all in all, the markets are just tending to go sideways here for a little bit, much anticipated, but we anticipate that as things continue to settle in the markets, that we will continue to see growth patterns regardless of what's going on. It just seems like that the economic engine is pushing harder forward than the forces that are trying to pull it down. So with that, we'll go ahead and sign off today. Thank you for watching. And if you have friends, neighbors, family, or co-workers that you feel like could benefit from our webinar, please feel free to forward that. And again, thank you so much for watching.